Welcome to TMS Insights. It's reporting season, so the first update of the August, mainly full year, but also half year results from a lot of companies. We'll jump straight into it. Ben Clark with me here, and Jeremy Hook, of course. It's me.
Hi, Jez.
We're busy at this time, Ben, but it really is a different sort of reporting season. The overall backdrop, we had lowered expectations. Some of the reports are coming in quite positively, but there's different moving parts, isn't there? Costs and some of the revenue lines. It's a really mixed bag at the moment.
Yeah, I think by and large so far it's kind of still fairly early days, but the market's kind of looking through what's happened in the last 6 months, and everyone's trying to work out how the earnings are going to recover, how quickly, to what level, whether companies still need capital, how the business recovery sort of looks. And that's where most of the analyst questions are definitely zeroing in on. And, you know, some stocks we've seen drop a bit after the results. Some we've seen deliver pretty tough results, but, you know, a more optimistic earnings recovery thing. Yeah. And that's where we're seeing the share price moves, I think, a bit more this time.
Yeah, no, so let's jump into them.
Yep.
REA Group, it's one of the early ones to report, and it's a real favourite of ours, obviously, but it was a really good result in what you'd imagine a very tough time.
Yeah.
And the real hero was the cost side of things.
Yes.
And people will be interested in just how COVID saved the money.
I mean, you know, when you think what this company went through over the last 6 months, for 2 months, most houses weren't allowed to have an opening for inspection. You would have been pretty crazy to try and sell a property. So listing volumes collapsed. They were planning on putting a price increase through in March, which they decided not to. But yet earnings only fell about 9 or 10%. Yeah. And that's because these platforms or these businesses, they can get their costs under control very quickly. They can adapt rapidly. And I think with that one, that's one where we could see a very rapid recovery in earnings. If Victoria can come out of this lockdown reasonably quickly, we start to see a more normalised listing level, and they push through this price increase, it looks like, next year.
We call these the capital light businesses, and we like a lot of the ones which are like that, but we didn't realise just how they could turn off some of their costs so quickly. So the online world, we're all using, you know, teleconferencing methodology. They're not having to meet in person or have big conferences, which actually costs them a lot of money.
Yes.
So that's flowed straight through the bottom line.
Yep, travel budgets. And you know, there actually wasn't a lot of people who lost their job. It was more on expenses that they seem to have reined it in.
Yeah, terrific. Okay, ResMed's had good and bad, hasn't it? Because there's obviously the ventilators, which are going really well, while the masks haven't been in a COVID environment. Yeah,
look, it's tale of two parts of this business. They sold 150,000 ventilators in the last 6 months. That's 5.3 times more than they sold the 6 months prior. It's an extraordinary windfall sort of gain for them. But the sleep part of the business, which is the much bigger part of the business, had a really tough 6 months, particularly in America, where people didn't want to see doctors. Sleep wasn't a priority in terms of diagnosing apnea, and people generally reluctant to leave the house. So Mick Farrell, the CEO, sort of said that bottomed out in April. And the ventilator demand, interestingly, topped out in April. We think sort of a gradual recovery for 6 months and then an accelerated version after that. I think a pretty good buying opportunity.
Yeah, and we'll talk about that in a moment when we talk about post-COVID stocks, because that's certainly one of interest. On the big cap side, Ben, CommBank, they actually, I mean, they've been the premium banking stock and it sort of showed up. There wasn't anything to be joyful about, but again, they're outperforming their peer group.
Pretty solid result given what's going on. And, you know, I think a lot of work that's been done on the compliance side of the business and reputational and cleaning up a lot of the mess that was created in the last 5 years. The auditor said the bank almost looks, you know, like a completely different company to what it did 2 years ago. So they've done a lot of great work there, and I think, you know, working with the government, they're really keeping the economy going. And although, you know, the numbers aren't great when you look at it, they were forced to cut the dividend but it's a safe pair of hands, you'd have to say.
Yeah, that's right. No, good points there, mate. So much you could say about this. Again, we know what they report. Like, they always gaze out to the long-term future, and short-term the markets tend to be a bit punishing on them after their result. Yeah. This happened again now, but again, there's nothing that came out in that which gave us a lack of confidence about the long term of that, see?
No, the highlight again was Xiaoping, the Chinese employment business, which grew its revenue 12%, and they said was almost back to sort of a normalised rate by the end of the half. Of course, Brazil, Mexico, Australia, a much tougher environment for them. But again, like the earnings only fell about 10% for this business. And you think what the job market's done around the world, pretty tough environment. So I think importantly, they kept investing through the half. Ian Narev he runs Seek International now, gave a really good upbeat sort of presentation on what they were doing. And they've kept the $5 billion aspirational revenue goal, which if they do get to that over time, we'll see a much higher share price.
Yeah. No, good long-term focus from actually Seek, but I was going to jump into Altium because I'm thinking long-term goals there. Altium are one of those great forward-thinking companies who, again, the language was all about how do we gear this for higher growth, actually, rather than anything else. I mean, challenged in this environment, but obviously short-term issues and a stock that actually could, post-COVID, get its mojo back again.
Yeah, this was a great presentation, I thought, and they're sticking to their $500 million US dollar revenue goal by sort of 2025, 26, 100,000 subscribers. And they've importantly launched Altium 365 in May, and they've seen much faster take up than they were expecting. This is the platform that is hosted in the cloud and could completely revolutionise the way the electronics industry operates. So they've got very big goals. They've achieved everything and more that they set out to do. So, it's another one that looks pretty good to me at the moment.
So the future looks higher margin and higher recurring revenue.
Yes.
Which is great for that company.
Moving toward a SaaS-based way of charging. So, sort of away from a perpetual licensing fee and talking about much better EBIT margins that they'll be picking up as well.
One that wasn't great was Challenger, and obviously the annuities business has been an impact of the change in the advisory market. Yeah.
I mean, these guys have really been hit by. It's incredible how quickly our industry effectively is changing. 42% of Challenger's annuities were sold by bank financial planners 2 years ago, and now it's 12% because the banks have basically just got rid of their entire financial planning divisions. But there are some green shoots here, like the Japanese sales for the first time overtook Australian sales, and they were up over 150% selling annuities to the Japanese. And the institutional sales were much stronger as well, but they did have a very rocky period through these investment markets, being forced to sell some of the investments that back the annuities at some pretty tough times. So sort of one step forward and two steps back.
Yeah. Horizon was an interesting one, Ben. That's a stock that, clearly, formerly the QR National business, really nice result overall, I thought, and a good dividend player.
Yeah, and we're looking for them because there's not many of them.
No. Dividend stocks are hard to find, aren't they?
They are. But this one, coal volumes have held up really well. I think they're very well managed. It's one we're going to maybe do a bit of work on because we do know that clients are looking desperately for
good quality income stocks.
Absolutely, yeah.
Look, before we wind up today, I just want to talk about what has been obvious to a lot of investors is how do we manage the COVID environment? How do we manage the post-COVID environment? Ben, there's been some clear winners in this reporting season, names that we're not going to go into depth about, but Nick Scali, JB Hi-Fi, Adair, for example, companies that have been getting the spend at home value out of this current run. But we should all be thinking about what happens post-COVID, not because the news alone about vaccines is coming closer, but at some stage, that's where the real upside in the next leg will be, won't it?
I think so. And I would flag, I think we're of the growing view there will be potentially quite a big rotation of money in the market. We've seen it in the past. The last time was when Trump won the election completely unexpectedly. Greg Hunt spoke yesterday, and the government seems increasingly certain that we are going to get a vaccine. If you read Bill Gates' work, Anthony Fauci, they all seem to be thinking it's getting pretty close. The announcement of a vaccine could see a lot of the stocks that have really been hammered with COVID issues suddenly picked up
Picking
again.
up, yeah.
And we could see some of the stuff that's done really well through this environment get sold off to fund it. So that's something.
And if just a couple of names, because we encourage you to speak to your advisor. Everybody's circumstances will be different, but something like a Sydney Airport was $9+ pre-COVID. It's done a capital raise so it can get through the next couple of years without any dramas. But we've got it now in about the 530 mark.
Yeah.
So the upside once that happens could be pretty special for things like that.
I mean, stocks like this could put on $1 or $2 just with the knowledge that travel is going to start to normalise. It's not going to happen as it normalises it. It'll be ahead of that time.
And even the returns, if that happened over a year or plus, would be very good.
And they'd resume paying dividends and all that sort of stuff. And there's things, Transurban's been hit by
event
cinemas.
It's quite a lot.
There's a lot there that it feels like the wrong thing to be looking at them, investing them, but
which is often when you get best returns.
Right,
Property trust banks are also very leveraged.
Yep,
so
absolutely.
Plenty to chat about in the market, not just reporting season, but portfolio positioning. So that's all we're going to bring to you today. We will bring another update at the end of the reporting season.